Proceed.
Thank you. All right, market structure. One of the most important skills that you need as a trader is the ability to read the market structure. It is critical skill. It is a critical skill that will allow you to use the right price action strategy in the right market condition. You are not going to trade all the markets the same way. Yeah, you need to study how the markets move and how traders behave in the market. The market structure is a study of the market behavior. So it's as simple as that. The market behavior, the market structure. And we've been talking about this almost every day. But before we take any trade, we have agreed that the first thing to note is the structure of the market or the trend. Mostly we call it the market trend. Okay, great. Now, according to this book, we have three types. We have the trending market, and then we have the ranging market, and then the choppy market. So let's look at the trending market. It says that trending markets are simply characterized by a repeating pattern of higher highs and higher lows in an uptrend, and lower highs and lower lows in a downtrending market. Okay, and I think we all know this. Higher high, higher low, higher high, higher. That's what we've been saying all along. Higher high, higher low. If you start seeing series of higher highs, you know that you are in an uptrend. If you start seeing series of lower lows, you know that you are in a downtrend. Okay. All right. So how to trade trending markets? Let's look at that. If you can identify a trending market, it will be easy for you to trade it. If it is a bullish market, you will look for a buying opportunity because you have to trade with the trend. And if the market is bearish, you have to look for selling opportunities. Look for the selling opportunity. That's when the market is in a downtrend. So the question is that, what is the right time to enter a trending market? I think this is our biggest question, right? Everybody seems to ask me this question. And it is easy, very, very easy. Identify the trend of the market. If it's in an uptrend, you are going to buy. So at least you know what to do, just that you don't know when to get in, okay? If you're able to tell the trend of the market, then you know what to do. You are going to buy or sell. Great. Let's look at an uptrend. Now, this market, this is what? An uptrend. So over here, we are going to talk about support and resistance levels. So we always say that we mark resistance levels in an uptrend. That's what I have taught you, right? In an uptrend, we mark resistance levels. And we are going to do so at the point that we mark as higher highs. So if you look at this side, he started the higher highs from here, okay? Higher high, higher high, higher high. There will be one here, another one here. Great. But we have also said that we buy on a support and sell on a resistance. Okay, this is our anthem, right? So if you look at this side, they have indicated, what do you call it? Support here. It's in an uptrend, but we can see support levels here. Why? Because when the higher high, we mark our resistance. When that resistance is broken, we all agree that the resistance becomes a support. And this is the reason why we buy in an uptrend. So when the market comes for a retest, we take our buy. And so we are buying from the support. So ideally, we mark resistance levels, but we buy from support. And this is because when the resistance level is broken, it becomes sort of support. So if you look at it, you see that all these levels, they've been marked as what? Support. And that is because they've been broken and now they are what? Support levels. All right. I hope you get this point. One of the most important points to pick from today's meeting. And then this is a downtrending market. And then you can see series of what? Lower lows and lower highs. We look for support levels and then we mark them. What do? We wait for market to break the support level. When they are broken, they become resistant. So that's why he indicated here that this is what? A resistance level, not here. But this side, market was above it. And so that was what? A support level. Market broke it. Then it became a resistance. So you take the sell from here. All right. That is how we trade. This is how we trade. And it is very, very easy. So if you know when to enter the market, first identify the trend of the market. Mark your support or resistance levels. Wait for market to break it. When the market breaks it, wait for market to come back to the level you marked. So you are going to enter the market when it gets to the level that you marked. I hope you get it. Yes, you are going to enter the market when it gets to the level that you marked. Great. So that's how we enter the market. All right. I'll take your question. Let me finish with this. Okay. Then the next thing that we moved to is a trend line. It was showing us how to draw a trend line. Let's read something from here. To draw a quality trend line, you will need to find at least two minimum swing points. The swing points are either higher highs or lower lows. Okay. Yes, either your higher highs or the lower lows, and also the higher lows and then the lower highs also form swing point. Okay, so you identify at least two of them and then simply connect them with each other. Okay, so if you look at this is a downtrend, and these are what? Higher lows, right? And lower highs, sorry. These are lower highs. So identify two of them and try to connect them. When you do, you can extend the line downwards. And what it will be serving as what? A resistance level. So anytime that market gets to that level, if it is a resistance level, what are you going to do? You are going to sell. You are going to sell. Now let's look at this. The most important thing to pick from here. So don't use smaller time frame to draw trend lines. Use always the 4-hour time frame and the daily time frames to find obvious trend lines. This goes to day traders. Pay attention to this. Don't do this on a lower time frame, okay? In fact, you can modify it to H1. At least it will help you. If you draw trend lines on lower, very, very lower time frames like 15 minutes and 5 minutes and all these things, you are just waiting to throw your money away. Yeah. So be careful with that. To be accurate, you must do this on a higher time frame. That's why he's saying that. Okay. That's why the book is saying that. Great. Now, if you are in an uptrend, then you are going to mark the distance, the higher lows as your swing points, and then you try to connect them. So the same way, at least two, then you extend your line upwards, and that gives you a perfect trend line. This gives you a perfect trend line. So one, I see sometimes people draw different trend lines, and then some are very scary. Trend line, it means it has to confirm with the trend of the market. Okay, it must conform to the trend of the market. So don't force the thing. If it is not there, don't force it. Sometimes I look at some of your trend lines and all I do is laugh here. You know, I can't laugh at you on the platform. So it's a trend line. So you should confirm to what? The trend of the market. Great. And then the next thing is what? Ranging markets. So we've spoken about trending markets. We've looked at what? Uptrend and downtrend. Ranging market is very easy, right? It gives us equal levels. So you see that these are the highs and these are the lows. So you mark this as your resistance level, and then you mark this as your support level. Okay. Yes. So this is for a ranging market. And trading a ranging market is very easy. You pick a sell on the resistance, and then you pick a buy on the support. So you can see that he has indicated some things here. Now, these are the touches on the level. And then we can pick our entries from here using candlesticks pattern. So look at this. Assuming we made this entry and then we came to meet this. This thing here is almost like what? A gravestone doji. And we said a gravestone doji signifies a trend reversal. And if we see it in an uptrend, we go for a sell. Here is the case, market is ranging and it is getting towards a resistance. So what do? We take a sell. So if I say that we can enter the market using candlestick, this is one instance. Upon the formation of the gravestone doji, we can go for a sell. That is it. Once it closes, we go for a sell and then we wait for it. I know you may have questions. Let me finish with trending market. Then we go to the charts and we do top-down analysis. So let me finish with, the market structure. Yeah. Okay, so there is an example here as well. So you see that the entries, look at the entries. See, you can see them here, all right? These are the things that we look out for, and then we pick our entries. Okay, good. So what if a market breaks a ranging, the price breaks a ranging market? What are we going to do? Our strategy, we'll use it here. Look at this. Market was ranging. Once there was a breakout, so the market moved up. Now, in this case, it didn't give us any entry upon the breakout. But because it has broken the resistance, we are sure that market is going to continue on an uptrend. So we can start marking higher highs and join upon a retest. Fortunately for us, situations like this, it broke the resistance level and performed a retest on the resistance. And then we go in for a buy. Now, so I think we can compare this to what is happening on VIX 25. You see, it was ranging and it broke it, came for a retest, which I think it's lured us last 3 days. We went in for a buy and it's bought for some time, but then later went against that and now has started buying again. Okay, great. So what is happening on my screen? Okay, so that's that for a ranging market. Now this is a choppy market. If you see something like this, you can't possibly tell what is happening. It means the market is choppy or is consolidating. And when you see something like that, you leave it because you can't tell the trend. So wait for the market to break away. When it breaks, then you join. So if you observed what I posted on my started on VIX 51X 3 days ago, I posted something and I was like, it's either you wait for it to get cooked or you get cooked. I was talking about this. Market was consolidating on H4. So I was waiting for it to break away because mostly when it breaks away, that direction that it will take is what will continue. So you just wait for it to break away, come for a retest, and you join. And then if you checked it today, it's broke it and came for a retest and is now dropping. You understand? So when you find a consolidating market, don't trade it at all. Wait for it to break. Wait for it to break. So if you are swinging and then you see that the market is consolidating, the same way you wait. When it takes a direction, then you follow. So if it happens that it takes a direction and is now coming against you, you can decide to leave the market because it will follow that trend. Okay, great. So I think that will be that. So what do you call it? Time frames and top-down analysis. Let me read something about this and then we go to the chart. As a price action trader, your primary time frame is the 1 hour time frame, 4 hour time frame, and the daily time frame. Okay, price action works on bigger time frames. If you try to trade pin bars or engulfing bars on 5-minute time frame, you will lose your money because there is a lot of noise on a smaller time frame and the market will generate a lot of false signals. Let me highlight this thing. False signals because of what? The hard battle between the bears and the bulls. And this is the reason why you hardly see me trading on lower time frames. Okay. If you look at the lower time frame, you see a lot of entries, but most of the time they don't work. Most of the time they don't work. So it is recommended that if you're a day trader, you look at what? The 1 hour time frame, the 4 hour time frame, and the daily time frame. Okay. So besides, there is no successful price action trader who focuses on 1 minute time frame to analyze his charts. Maybe you have heard of the term top and down analysis, which means to begin with a higher time frame to get the bigger picture, and then you switch to the smaller one to decide whether to buy. I think when we go to the chart, I will explain better. So that is that. This is the reason why I don't trade on lower time frames. Okay, so this is the trick. I saw some people's hand up. I think you can ask your question now before we move to the chats. Yeah, if you have any question, you can ask me now. Is there any question for me? Yes, please.